Hello, good afternoon. You're watching Market Fatafat on ET now with me, Vinny Motiwala, along with me, Cheryl D'Souza as well. Cheryl, a very good afternoon to you as well. Markets being a bit resilient, right, in trade today. We did see a jump up, slight bit of a correction, and then again coming back to those high levels.
Absolutely, markets are being resilient in today's trading session, Vinny. We are firmly in the positive territory with a 0.5% uptick coming in for the benchmark indices. If you look at Nifty Bank, that one also is moving in tandem with the benchmarks. Let's take a look at what the broader markets are doing at this point in time, both mid-cap and the small-cap index, and where are they headed at this juncture. You have mid-cap at the day's highest point, small-cap also ditto coming in for small-cap index. If you look at the sectoral indices, last time I checked, all the sectors were actually holding on to good gains. But that's the way how the markets are looking like at this point in time. Resilient Friday indeed, Vinny.
Absolutely. Let's keep an eye out on what happens in the next couple of hours of trade as well. But on that note, let's get started with all the stocks that are buzzing in trade, either on the back of news flows or on the back of technicals. On the technicals, we're joined by Aamar Singh. While from the research team today, we have Lisa as well as Ansh joining in with us as well. A very good afternoon to all three of y'all as well. Let me start with the first stock that we're going to be talking about today, and that's going to be Godrej Consumers. Now, this one is in focus after it came out with its Q2 update. When you look at it again, similar to Marico, this one also has seen a weak performance this time, and Q2 is what we're expecting. Weak volume growth recovery is what is expected as well. Now, the company has said there's a mid-single-digit volume growth that they are expecting to see this. Is below what the street was expecting. A double-digit constant currency sales growth is what we're expecting. That is the international business. Yes, that Indonesia as well as JAUM both are expected to do well. Other than that, low single-digit growth in INR terms, sales growth is expected to be similar to that as well in the mid-single digits in INR term. And yes, expansion is expected in other margins of the company. But other than that, in terms of volumes, it's expected to be a bit subdued, whether you look at it even from the point of view of their overall business. It's expected to be a bit subdued in terms of growth there, and that is a concern that is affecting the street as well. And look at it as of now, trading subdued, down almost 0.3%.
All right, let's shift focus then to the aviation pack, both Interglobe Aviation as well as SpiceJet. Firstly, Interglobe Aviation, if you see that particular counter, saw an uptick of as much as 4% on an intraday basis, taking the stock to the highest level since August 14. The company said that they've introduced a fuel charge to offset the rising aviation fuel prices, and this is effective today. They've said that under the new pricing structure, passengers booking Indigo flights to incur a fuel charge per sector based on sector distance. And this morning you had source-based information as well. The SpiceJet also will follow suit, and because of all of this, you'll also have the airfares also spiking higher during the festive season. So watch out for both SpiceJet as well as Indigo in today's trading session.
Okay, keeping an eye out on the aviation space, especially as of now. But let's move on, talk about Godrej Industries then, Amar. That's the first stock that you've picked out for us on the technical front. What is the chart now indicating for Godrej Industries? Where is it headed? Last 6 months, around a 55% return is what we've already seen. So at the current price, would you say that one should start booking profits, or maybe look to enter a bit more or accumulate some more of it?
Very good afternoon. So what we're witnessing in Godrej Industries is that the stock was consolidating around the 550, 580 levels, and then the stock took off from there. And currently it's around 650, 54 levels. And what we have witnessed is that the rally which started on 22nd of August, 23rd of August, since then the stock has been in a very strong uptrend. Going back in time, we see that somewhere around the current level 650, 660, that's a very strong zone of resistance, because that was the earlier levels in January 2022. So clearly tells me that this could be a level to look at booking some profits. Yes, if the stock starts sustaining above the 650, 670 zone, then the stock is heading significantly higher. Because what we're seeing is the volumes have been significantly higher over the last few trading sessions, and talking about the trend strength continues to be very strong, and also the momentum is there to stay. So those who are long, they can look at booking profits. Once it starts sustaining above 670, then we could see the stock rallying towards 720, 730 levels.
All right, so that's a view coming on Godrej Industries. Lisa, coming to you, Nykaa. Why is this one in focus today?
Yes, Nykaa is in focus as it came out with their quarterly update for Q2, and their operational performance was quite strong, as well as the demand trends that was highlighted by the company. Well, talking about their consolidated net sales value, that is expected to grow in mid-20s, while their revenue is expected to grow in early 20s on year-on-year basis. Talking about their segmental growth, the beauty as well as personal care business, NSV, that is expected to grow 20% on year-on-year basis, and it's likely to grow on the back of expansion through their multiple channels, both online as well as offline, and also growth in their brands. And on their other segment, that is fashion, the net sales value for that fashion segment for the quarter, that is likely to grow in early 30s on year-on-year basis, and it is on the back of improved order volumes. Well, the management also said that the festive season, that is a big driver for the lifestyle category, and Nykaa was up in early morning trade. It was up around 3%, but still it has cooled off its gains, but still holding up about 1% in trade, and this is after seeing 3 days of consecutive losses.
Let's move on and talk about another Q2 update that has come in, and this one is from Kalyan Jewellers. What a strong update again coming in from this one. Ansh, what are the details now?
Sure. So Kalyan Jewellers is up around 10% on the back of Q2 operational updates. Company has reported consolidated revenue growth of approximately 27% on year-on-year basis, with a substantial 29% growth in the first half of this fiscal year. Also, if you see the charts, stock has given a breakout from reverse head and shoulder pattern, plus it has been forming higher lows for 6th consecutive month now.
All right, that is Kalyan Jewellers. That is actually almost hitting 10% in today's trading session. Aamar, coming to you, let's talk about Chalet Hotels. And we all know the hospitality sector is a buzz, be it G20, now you have the World Cup, everyone's watching out for these sectors very closely. Chalet Hotels, stellar run in the last 6 months, at least 70% uptick. Where do you see this one headed from here on now?
What we are seeing here is that this stock is trading at record highs, and technically, if you look at the charts on the long term as well as the short term charts, the trend continues to be very strong. The momentum is there to stay. So on the upside, currently it's trading around 670 odd levels. The stock, what we witnessed in the last few days, there has been a significant increase in volume. So that clearly shows that there's a lot of exchange of the stock happening at the current level. So it will also be profit booking at the current level. So the stock currently needs to sustain over the 620, 625 zone. Sustaining above that level, then the stock is headed higher towards 660 odd levels in the short term.
Okay, surely keeping an eye out on those levels for Chalet Hotels as well. But move on and talk about Adani Wilmar. Again, Q2 update candidate, we could say. Next week we'll start with earnings, but this one also, when you look at the numbers in terms of that came in, nothing that great. But yes, overall the sales value, they have seen a bit of a decline this time around because of the edible oil prices being a bit of a fluctuation there. Strong volume growth is expected in double digits is what the company is highlighting. Rural sales, though, they have given a different commentary versus what we saw from Marico. They said that rural sales actually, they have been growing at a faster rate now. So yes, that's something interesting because Marico highlighted a bit of a delay in terms of the rural recovery. Profitability for Adani Wilmar, that is expected to continue to remain under pressure. Food and FMCG revenue growth expected to come in at 25%, while volumes for food and FMCG businesses are expected to grow at 18% for the company, and edible oil segment is expected to grow in at around 5% as well. So let's keep an eye out on Adani Wilmar on the back of the Q2 update.
All right, moving on, Aamar, let's talk about Solar Industries. And how is this one looking to you on the charts? So it's an attractive bet coming up right now?
Yeah, looking at solar industries, what we see here is that the stock, after making a high on 28th August, from there the stock corrected and then it was in for consolidation. Again, the stock has picked up steam and we are seeing that currently trading around the 5,100 odd levels. So this is one stock one can look at from a long-term perspective. The stock now has got very strong support coming around the 800, 5,000 levels. So any pullback in the stock can be a buying opportunity. The stock is already trading at record highs. So fresh entry in the stock at current levels would not be advised, but one can look at booking profits in the stock.
All right, that is Solar Industries for you. Let's shift focus. Let's talk about REC and why is this one in focus in today's trading session. We know the REC with the rest of the power pack was actually a buzz, but particularly REC is a buzz because the credit rating for the long-term perpetual bonds has been upgraded to CARE AAA stable from CARE AA plus stable, and this particular rating change has been taken by CARE Rating. So on back of that, you can see the REC is in focus in today's trading session.
Okay, REC in focus on the back of that. But let's move on, talk about Eris Life Sciences and what is that doing in trade today, what is expected to do going forward. On the technical front, Aamar, how is Eris Life Sciences looking to you? 52% return is what we have seen, gradually started moving up, and in the last 6 months, 52% not a bad return. What is your view now?
Yeah, I would say that the stock continues to be very strong on the long term and the intermediate term trend. And we did see the stock consolidate because what happens is that post a very sharp rally which the stock had witnessed since I would say March, then the stock started consolidating in the last week of August, and there were a few weeks of consolidation. Again, the stock has breached that level because earlier the resistance was somewhere around 870 odd levels. So that has been taken out. The stock is trading around 900 odd levels. But yes, on the upside, the stock would meet with some sort of resistance around the 920, 925 zone, which could act as some sort of profit booking level for the stock. So that could be a level one needs to watch out for. Those who are long, they can look at booking profits. Those who want to enter the stock in fresh, they should wait for some decent correction, or once the stock starts sustaining over the 925, 930 zone.
All right, that is Eris Life Science for you. But Lisa, coming to you, Valiant Labs, why is this one in the spotlight?
Yes, it got listed today, and it got listed at a premium of around 16% at 162 per share, both on NSE as well as BSE. Valiant Laboratories, it's a part of RT Group, and the listing, it was in line with what analysts expected. They expected a listing of around premium of around 15 to 18%, and that's what it delivered. Even the subscription numbers was quite decent. It was subscribed 29.76 times. Well, talking about Valiant Laboratories a bit, it's an active pharma company, and they are also into bulk drug manufacturing, and majorly they focus on paracetamol. Well, on their IPO proceeds, they'll be using the IPO proceeds for setting up a specialty chemical manufacturing facility in Gujarat. And talking about their valuation, at the upper end of the price, it's valued at around 15.71 times, which according to analysts is quite fair. But the over dependence on one product and also the client concentration, that is a key risk for the company. So yes, it's still up at around 5% as we speak in today's session.
Let's move on, talk about Apollo Tyres then on the charts. And Aamar, when you look at it in the last 3 months, this one has seen a bit of a correction in the last 3 months. Now, from here on, what do you think the view is actually shaping for Apollo Tyres? Would you buy at the current levels?
I would say the stock has corrected from almost 440, 450 levels to currently trade around the 380 mark. And if you ask me from a technical perspective, the stock continues to be strong on the long-term charts. On the intermediate-term trend, we've seen the stock correcting, some sort of consolidation happening. And also what we've seen is that volumes have started picking up over the last few weeks. So that is a positive sign. Now the stock needs to sustain above the 380, 400 zone for any upside rally towards maybe around 10 to 15% rally on the upside. But for that, the stock needs to sustain above the 380, 400 mark. So this is one stock one can definitely look at. The stock seems to be forming up a strong base around the current levels.
All right, moving on, Ansh, let's talk about PNB Gilts. Why is this one in focus today?
So PNB Gilt is up over 16%. In a recent development, Board of Directors has approved necessary memberships and prerequisites to enable Forex business operations. Also, if you see the chart of the stock, it has hit a 2-year high level today on an intraday basis. In addition to that, it trades above 50, 100 and 200-day moving average.
Okay, that is PNB Gilts for you all. Let's not forget the stock has been buzzing for some time because of the bond inclusion that came in for the Indian market. Since then, it was buzzing, and today, obviously, on the back of this is furthermore that we're seeing an increase coming in the stock price as well. But let's move on, talk about KC International then, Aamar, on the charts. What is KC International expected to do from here on at 682 levels? Still attractive, or maybe time to start booking profits?
Yeah, I would say that the stock continues to remain strong on the charts. So this is one stock one can definitely hold, and they should look holding the stock for some more time till we see some sort of consolidation in this particular company.
Okay, on that note, viewers, we're going to slip into a very short break. Don't go anywhere. We'll be back with more stocks after this break.
So the only reason why this is happening, Nikunj, is because the large cap stocks are not participating in the same gusto as with respect to the mid cap names. So you look at the price performance, for example, the likes of Glenmark Pharma, Zydus Life, Oro Pharma, in the last 10 months, 9-10 months broadly. Now you try and compare this with the price performance of the likes of maybe Sun Pharma. It's a very muted kind of a price action. So I think if I'm not wrong, the likes of Glenmark, Zydus Life, I think at their peak they were up some 70-75%. From their previous major swing lows, and I think in that respect, Sun Pharma has done maybe around 20-25% broadly, and Dr. Reddy is also in a very similar kind of a price uptrend. So that's the only reason why, because the large cap stocks, pharma stocks are not participating in the same price momentum as compared to the other mid cap names. That makes the trend a bit more, difficult to try and fathom. But I would strongly believe that many of these mid-cap pharma names are actually looking very attractive. I would still be very bullish on the likes of Zydus, Glenmark, even Biocon, for example, at 260, 270 levels. I think it's looking very attractive given the prospects of the charts over the last 2-3 years, where the stock had corrected from 450 odd levels towards the possible prospects over the next couple of years.
Naresh, I'm just picking one out of the, one random name out of the box, and that is one of the biggest multi-baggers of last couple of years, Escorts. It's at 200 now, Naresh.
So as of now, the move looks overextended because the rest of the names in the sector have not gone up this way over the last 6 months. But trend remains positive. So for now, one should be looking at it as a putting a trading stop loss. The last swing lows are at 3,050, 3,100. Once it breaks, that would be a trend change. And the fact is the stock has gone through that period of huge move multiple times and then has a tendency to go sideways. So if you go back to 2022, also after making a peak around 2,200, it just stayed there for 6 to 8 months. So I think whether it tops at current levels of 3,350 recent highs or at 35, 3,600, we are at the upper band and we could be getting into a multi-month sideways correction or a dip from here on. So I would not be looking to buy the stock at this levels, but maybe look out for a reversal to short.
Okay, let's take stock of some of the mid-cap strategies as well, as we are now hitting the pre-open rates. In fact, it's a smart start actually, marginally higher, but that's exactly what the GIFT Nifty as well was indicating, pretty much in line with the rest of the globe, as also the US handover too. The Nifty is now almost around that 19,600 print. But Kunal, what about mid-cap ideas?
So that's a buy on one of the stocks which I discussed earlier, Anantraj Industries. Looks very strong. The stock is back again at a major multi-year high. I think it's about to cross the 240 levels, which could take the stock back towards a 15-year high for itself. So that's a strong chart, building up quite well over the last many months. And look out for target of 242, stop loss 226.
Right. Naresh, what about your mid-cap strategies?
So that would be a buy on Sun TV with a stop loss at 610 and a target price of 700. The stock looks very interesting. It's made a move from 430 levels in June, July to 600, 620, then consolidated, took a dip to 580. Now has started making a high above that 620 mark. That was the high back in September 21. And the stock used to have this high back in 2019 as well. So it looks like a 3 to 5 year breakout here. And it has been a surprising move recently. And now we are seeing a follow-up into a 3 to 5 year high. Volumes have been good in this move, so could surprise in the short term.
Right. Okay, let's tell you what else is happening outside the world of equity markets. In the US Securities and Exchange Commission, or the SEC, has sued ex-chief Elon Musk to testify over his purchase of Twitter last year. Broadly, the SEC has said that the case is tied to Musk's purchase of the social media platform and the stock trading surrounding the acquisition as well. Taylor Swift's Eras tour has broken records before it even hit theatres. In fact, within a week until the movie comes on the big screen, it has surpassed